I'm about to show you an RSI scalping trading strategy that is so accurate it feels rigged. But nope, it's just stupid simple and super effective. Let's get into it. So the first thing I want to get into with this strategy, and something a lot of people have been asking me questions about, is the relative strength index. And I absolutely love this indicator. It's great at predicting trend reversals, especially on higher time frames. It can really help you find more A-plus setups so you're not taking unnecessary trades or even losses that you don't need to be taking. And I'm going to go over exactly that with you. So first, we need to actually understand what the RSI, or relative strength index, is. And it's basically just average gains divided by average losses here, which equals the relative strength or momentum in the chart. So it's actually plotted on a graph between the numbers 0 and 100, and I'm going to show you some trading examples after this. And what it does is it looks at the current values or prices and compares it to past values and actually calculates this out on a charted line graph. So it measures that momentum, and it can actually predict trend reversals through divergences. So you're either going to have bullish divergences or bearish divergences, which I'm also going to go over with you here. So typically we're looking at overbought here is usually greater than 70, or oversold is less than 30. And a lot of traders will use the RSI as an additional confluence. So for instance, if we are oversold or past this 30 here, so you'll see this little downward here, usually price wants to fluctuate at least back up to the halfway point, if not more, to that 70 area again. Okay, it just depends. So like here, it wasn't quite oversold. It fluctuated back to this halfway point, or the dotted line going across here, and then tapered back down into more of an oversold area. And then it finally came back to the overbought area. And the chart will move along with that. So you'll see we were oversold down here as well, and then we had to pump up all the way back into the overbought area. As you'll see, it tried to come down, but it was more of consolidation, staying above this halfway point here before being completely overbought, came back down to the halfway point, and then came back up to the overbought area again. So it tends to stay within the 70 and 30 area, and lots of traders will use this as a signal of when to buy or sell. So for instance, if it's oversold, they may be looking for longs in that case. They don't want to go for more shorts because it could have a likely chance of the price popping up again. Whereas if we're overbought, usually we can look for a pullback in the chart for entry for more longs maybe, or it may flip on shorts with us if we're looking for like a divergence or something else. So let's get into the actual divergences, and we're actually going to use this in our trading strategy here, and it's going to help us avoid a lot of bad trades and really find those A-plus setups we're looking for. So here, you'll see a bullish RSI divergence. So this is meaning if our chart's making lower lows here, and maybe we have a higher low coming up on the RSI divergence. So they are going in opposite directions, creating this divergence. So if you see a divergence like this, it's likely that instead of going shorts, like we could have been going shorts all the way down here, right? Now, it might be a trend reversal, especially if we're getting a change of character, which I go over in my other videos on my channel if you care to check them out. So we did get a change of character here. We got a pretty bullish candlestick pattern going up, signaling we could probably get a trend reversal here and may be going for longs now instead of shorts. Now, the divergences were better on higher time frames, okay? So I'm going to go over that with you after I go over a few examples. But I'll show you exactly what I'm talking about and what I mean when I do show that. By higher time frames, I mean sometimes the 5-minute isn't even that great, but like the 15-minute, the 45-minute, the 1 hour, the higher time frames are going to be more accurate than if you're just looking at the 1 minute. The 1 minute could just signal simply a pullback in the trend and maybe an entry, whereas the higher time frames could signal that trend reversal, and you should be aware of, instead of keep going short here and getting stopped out of your trade, now maybe you can look for longs instead. So now let's cover the bearish divergence. So here, the bearish divergence, as you can see, we're actually making higher highs here, right? And our RSI, it's overbought here, and it's making lower highs. So we got these two coming in opposite directions, creating this divergence. So when you see something like this, you'll see we could have been taking longs all the way up here or just holding a long play. And then as soon as you saw this divergence start to hit, maybe got some bearish candlesticks, you should probably consider getting out of your long if you're currently in a long. Or if you're not currently in that long, wait for a change of character or something, and maybe now you could enter in a pullback on the short and continue to look for shorts on your way down. So these divergences really help to signal trend reversals or where to enter possibly for pullbacks, depending on the time frame you are playing on. So now we are going to actually go over and cover this 5-step trading strategy here. And this one, I love to play on the 5-minute. I try to keep it pretty simple. And usually if you're hitting the market opens, you can expect to be in and out of trades. I'll actually pull up TradeZilla here. We are just starting out on the month, but what do you do? Granted, we're only 2 days in, right? But these are the two kind of trades I'm going to show you. So we had this 402 trade. So this trade was actually entry time at 9:30 a.m. to 9:41 a.m. So you're looking at a 10-minute trade here playing on the 5-minute time frame, which is great. I like to be in and out of my trades pretty quickly. Can you hold them longer? Certainly. This could play out through the day and you could get way more profit. And then we'll look at the trade I took today. I'm just pulling these up real quickly because they're fresh in my mind. There's something I could go over with you really quickly. This one, I could have got a lot more profit out of it. So I'm actually going to show you how you can trail your stop loss as well. You'll see, could have made about $1,000 on this trade with a 4 risk reward, but I guess it was more of a 20-minute trade. Sorry. 9:04 a.m. to 9:27 a.m. on this trade. So I'm just going to go over these really quickly with you today because they are fresh in my mind. And this strategy I absolutely love. It really calms down my emotions, I would say, more than anything else. If you're just starting trading too, and you're looking at the lower time frames like seconds or 1 minute, this 5-minute, it's going to be a lot calmer. And really per session, you can use this throughout the day. You know, you don't have to use it for market opens. We're looking for fair value gaps. We're drawing your Fibonacci. And then we're just checking to make sure we don't have any divergences going on. That's about it. So you can use this throughout the day or night, depending what time you're playing. I like to play market opens because I like to be in and out of trades, and it's the quickest time to get in and out of trades. I don't want to be sitting for an hour in a trade. That's just me, okay? If you want to sit and wait for your trade to play out, that's okay as well. But our rule number 1 here, so first thing we're going to look for here, and I'm going to go over these 2 trades with you, is a 5-minute fair value gap, okay? So FVG stands for fair value gaps. If you don't know what a fair value gap is, I do have a video of that going over that on my channel. So I will link that up above and below for you guys. The next step, we are actually going to draw our Fibonacci, and we're going to look for entry. It's usually, I would say a lot of the time it's around that 0.618 level. And usually one of these Fibonacci lines are actually going to line up with our 5-minute fair value gap. So next, third step, we're going to check to see if we have any divergences. So if we were looking at longs, maybe we had higher lows being made and higher highs being made, signaling that uptrend and that we can look for longs. We're going to check and make sure we don't have any bearish divergences going on. If we have a bullish divergence going on, great, even better. That goes with our long theory. So if you see something going along with your long theory, like a bullish divergence, great, go for it. But if we see a 15-minute divergence, we really need to be aware of this bearish divergence because this may stop us out. And it wouldn't be considered an A+ setup necessarily then. A 5-minute bearish divergence, if we were going for a long, this could indicate just a pullback. And I'm going to show you that exact trade today, okay? Sometimes the 5-minute and 1 minute will signal just a pullback, while the 15-minute can signal much more than that. So that's why I always check out these divergences. And sometimes, hey, you're not going to always win every trade. You know, a good win rate in trading for a lot of traders is 50%, meaning you're winning half your trades and you're losing the other half. And yes, you can still be profitable that way. I also go over that on my channel as well, just to show you guys. So we are going to check for those divergences there. Where do we put our stop loss? I'm going to show you that exact setup. So we're going to put our stop loss actually below the 5-minute fair value gap candle, okay? And I'll actually show you a trailing stop loss as well if you wanted to ride your trade up and you're willing to let that play out instead of just taking profits right away if you wanted to take that approach. Every trader's a little bit different. I just want to show you all the approaches to take so you can decide what's best for you, and you can feel free to back test this as well. So our take profit areas, we're actually looking at the 1.272, the 1.618, the 2, or the 2.272 on the Fibonacci levels, okay? So let's move to TradingView now, and I'll show you exactly what I am talking about. I'm first going to cover this first trade here just because it's fresh in my mind and we took it this morning, but I did enter late on this trade. I obviously didn't get as much profits as I should have out of it. Overall, still made some money, okay? I took my one trade for the day and I'm good to go. So during my trading sessions, I'm really only looking for 1 to 3 trades per session. I don't want to take more than that. Usually you're just going to end up giving your money back to the market if you're taking more than 3 trades per session. By per session, I'm usually trading from around 8 a.m. or 8 p.m. to 10 a.m. or 10 p.m. Okay, so that's New York's market open and Asia's market open. There's London's open as well. I believe it's around 3 a.m. or 4 a.m. my time. But this strategy also works throughout the day. If you were playing in the afternoon or something like that, your trades just might take a little longer. We are actually going to move back to around 8:30. We are on the 5-minute time frame here. You'll see I do have fair value gaps up. So if you go to indicators on TradingView, you'll see you can type in fair value gap. People sometimes ask me what that is, and these will just pop up. Do I have any settings on this? No. Do some people put 0.05 to get rid of the littler fair value gaps on the threshold? Yes, they do. So you'll see that one kind of disappeared there. I have 2 of them up, but this one would have disappeared there. But just to show you that, how you can play that out, I prefer just to see all the fair value gaps coming into play. So we were actually looking, I'll just go ahead, replay this here. So we were looking at this fair value gap here this morning. So we were playing the 8:30 to 8:35 a.m. We were looking at the opening range breakout. You don't have to mark that out, but I do go over that strategy in my other videos. And if you drop to the 1 minute here, you'll see we did have a nice, pretty big breakout where we are actually making, right? We got higher highs going on. These are all the things I pointed out. We got higher lows going on. A nice, solid, good trend reversal we're looking at here. We have a change of character on the 1 minute right here, meaning we had this high, right? We had this high down here, and now we made a higher high. We also have a lot of big bullish candlesticks coming into play, okay? This is all signaling a trend reversal to me. So instead of this complete downtrend that we had, now we're looking at more of an uptrend. So we'll go ahead and move back to the 5 minute here so I can just show you exactly what I'm talking about. But here it was around 9 a.m. this morning. So we had this nice bullish fair value gap here. Now, once you see a 5 minute bullish fair value gap, you'll see there was one down here too. And this was before I hopped on around 8:20 a.m. I actually saw this one, but I didn't take it just because I was messing around with the kids. Anyways, kids, summer break. But I will show you this first one that I did miss out on too. Move a little bit back here. So key indications here, we got to change a character on the 1 minute. Look at this giant bullish candlestick. There's not even really a wick on top of this. This signals to me we're probably making a trend reversal. What else do we have? We do not have any bearish divergences forming yet on the 5 minute time frame. Great, fantastic. I don't have to worry about a bearish divergence coming into this long play and maybe hitting my stop loss. You'll see here on the 5 minute, we have 2 bearish. We have this kind of longer double bearish divergence going on. And what happened? Tanked here. We made a lower high here and we really tanked there. If this didn't stop you out, this for sure would have. So this is what I'm paying attention to on the RSI. I'll pop up my settings for you now. So if you just type in relative strength index, it's just the TradingView one. I have it started right here. Here it is, relative strength index. You can pop that up. It'll look something like this. It'll be purple and yellow when you pop it up. You can double click one of those lines and we're going to change this. So I put my RSI length at 7. We're going to leave that closed. We're going to have SMA there, and we're going to have length of 3. And how do we get these beautiful divergences to calculate on their own? They will print late, okay? So they may print later, and you may see them after they pop up. So it is important to kind of eyeball these divergences because they will print later. But you can simply check box under inputs, calculate divergence. And there they all are, okay? So those are the settings I do use. We have style, if you wanted to color this, whatever colors you want to use, right? blue, purple, yellow, I don't know, whatever you want to use there. Here's the overbought gradient fill, as you're seeing. So we got the green here. And we're actually going to change the RSI upper band from the 70 that they have input there to an 80. And we're going to change the lower band to a 20 here. Okay. So this is what I have my RSI settings as. Don't forget, you can hit that calculate divergence. Like I said, it will print late. So if you're learning to read the charts, it is important just to start kind of eyeballing these things. It comes with practice and time, but you can hit the calculate divergence and you see they will pop up there. But we will move back here. We got this lovely 5-minute bullish fair value gap, a nice trend reversal coming up. So what we can do next, we'll go ahead, play this forward. I would probably, in this case, I'll drop to the 1 real quick just so we can see this. But we did have that 5-minute bullish fair value gap right here, lining up with our 0.618 at 148.17, depending on what coin you're trading. So if you wanted to, you could aim for a long, hit that 1.272 up here as your take profit. Where does your stop loss go? Right below the fair value gap candle. So if there's a fib line close to it, I'd say our closest fib line is the 0.382, which makes sense. I normally don't like. If we're hitting the 0.17, just signals it could just come back down into this downtrend to me. But you'll see here our stop loss should be right below the fair value gap candle. Give it a little bit of breathing room below that. Don't put it like on the wick. You will get wicks through these candles, okay? Give it some breathing room, and that is where your stop loss should go. The fair value gap candle. Not the fair value gap, the fair value gap candle, including that wick. Give it some breathing room, okay? So next, we are aiming for a risk-reward ratio of 2. So we have a 1.72. It's not always going to be perfectly accurate, right? You know, we're close to that 2 range enough for me. So we can aim for the 1.272. Of course, if you wanted to ride this up, I'll show you a trailing stop loss you can use, or you can set multiple take profits. So we could take a percentage of our trade off here, 25%, 25% here, 25% here, however you kind of work it and however you want to trade, that is up to you. But I'm just telling you all the little things you can do depending on your own style and how you want to trade, because everyone is different here. So we're going to go ahead, drop back to the 1 minute, but we're going to watch this bullish fair value gap. Remember, on our 5, we have our stop loss set, everything like that. And we're going to drop to the 1 minute just so it's a little bit easier to see, and we'll see how this plays out. So go ahead, play it forward. We are dropping down currently to that 0.618 level. We hit our 0.618, almost our 0.5, right? Came pretty close to it. We are currently sitting in that bullish fair value gap on the 5-minute. You'll see it's holding it pretty well even, okay? So you technically could have got 2 trades during this session. I missed this one. But here's trade number 1, right up to our 1.272, almost hit our 1.618. And here is the second trade, right? So me hopping on late, here's me grabbing the second trade here. So our first trade would have came up, hit our take profit. Now, what we can do, let's say we missed that first trade, like I did this morning, we will actually move back to the 5-minute here. And what are we going to do? We're going to do the same thing here. We're going to look for a 5-minute fair value gap. Now, me personally, I like this bigger one here. I'm not really going to pay attention to the smaller one. I do just like to have it up so I can see it on my chart. But I'm looking at this 5-minute fair value gap here since I missed out on this first one. Okay. Next, we're going to take our fib retracement. We're going to draw this from the top to the bottom of this trend on the 5-minute. And we are going to aim for the 0.618 again. Okay. And I will tell you exactly where I got worried at this morning. Okay. So me being a cautious freak and looking for those A+ setups, our new stop loss, right? If we are entering here, we're looking at the 0.618 level, lining up with this bullish fair value gap. You'll see this Fibonacci line is right in there. Could a 0.382 level or a 0.5 line up better with a bullish fair value gap? Certainly, it could, and you may want to look at those levels instead then. However, both these times our 0.618 lined up inside the bullish fair value gap. That's why I was looking at those levels. So next, stop loss. We're moving our stop loss with this next 5-minute bullish fair value gap candle. So this guy right here. So our stop loss, we're going to give it a little bit of breathing room, remember? So give it some breathing room. Here's our 0.5. Probably put it just below that. And we'll go ahead and play this one forward. So this one was a little scary. And right now, this is exactly what I'm going to show you. we have a triple top going on, okay? We have a triple top. Not always a fan of those. We don't really have a bearish divergence printing yet, but that could be an indication that we could see some downward. However, if we move to the 15-minute, and this is step 3, remember we're checking for divergences. Do we have a divergence on the 15 yet? We do not. We're just going upward. We already hit this bearish divergence. How do I know that? We already had this drop here. So this bearish divergence already played out. We don't need to worry about that bearish divergence anymore. So we don't have a bearish divergence on the 15, meaning we can probably still look for longs here. I am okay with that. We're checking the higher time frames for these divergences, so we are less likely to get stopped out of our play, okay? Nothing is 100% in trading, but this is an extra confluence to help you realize to not get stopped out of play, okay? My only problem, like I said, was this triple top going on. I was like, I don't know about that, but we will go ahead, play it forward, move down to the 1 minute here, so I can show you guys exactly how it looks. So we'll play this forward, and you'll see on the 1 minute, you're going to have a ton of divergences going on. The bigger ones, you know, the multiple ones, like this one, we had 3 in a row. What do we see? Huge downward tick. Here, we're just seeing pullbacks. We got one bullish divergence, just signaling a pullback, a little bullish divergence, a little bullish divergence. So some of these are just signaling pullbacks. That's why I don't pay as close attention to the 1 minute unless I see something like large like this or multiple divergences. But we'll play this forward. It's our 0.618, and you're going to really see how much this one really stutters. It did take it a minute. Okay, so it stuttered for quite a while here. Not quite a while, but in trading minutes, it feels like a while. So it stuttered here for around 20 minutes before coming up to our take profit level. And that's why I was getting a little worried, but I've seen this a million times, so I know I shouldn't have been. But I was just worried about that triple top more than anything else. Okay, so now we got a little bearish divergence forming on the 5 minute. So we would have been in and out of this trade at that 1.272 again. So we should have already been out of this trade. Doesn't matter. We hit our take profit. We hit our 0.618. Trade is over. Okay, we can move on. So it's coming down currently back into our 5 minute. I took profit up here, so I was done with the trade. Coming back down into this 5 minute bullish fair value gap. And I just want to show you 5 minute bearish divergences aren't always going to signal that trend reversal. Okay. So coming back down, and then it just shoots up. So if you wanted to trail your stop loss, show you a trailing stop loss here, okay? Our first stop loss right here with this bullish fair value gap candle right below this guy, okay? We now created another fair value gap candle. You can trail your stop loss up on this 5 minute time frame, okay? So let's say you didn't exit at this 1.272 here where our take profit was, but you just moved your stop loss, would have been the same. It would have came back down into your bullish fair value gap. You probably would have gotten scared here, right? Probably, oh no, I'm going to get stopped out. But it held this bullish fair value gap again, okay? And then it moved back up, created another bullish fair value gap. So now, since you entered at the 0.618, you are in profit, okay? So you can pretty much ride this up. So we're riding this up. I'm just showing you a trailing stop loss in case you prefer that way, okay? Now we have another bullish fair value gap all the way up here. Now we're really in profit, okay? We're at the 1.618. So your stop loss, this red line here, just below this fair value gap candle. Keep on trailing, see what happens. Oh, we have another fair value gap, okay? We're gonna trail our stop loss again. So our stop loss is now with this fair value gap candle. We are a lot more in profit than what we would have had we stopped at the 1.272 level. You might lose more trades if you don't get out at the 1.272. However, if you just follow this day by day and follow this to the T, the rules, you could get some serious profits of trailing your stop loss out of these trades. Okay, so here's the 5 minute. Oh, okay, we're stopped out now. So we stopped out around the 2 level, but I just want to show you the risk reward. So yeah, $700. So our risk reward would have been around a 7, entering at the 0.618. And trailing our stop loss up that high. So risking $100, let's say, you could have gained $700 out of that trade, okay? You lose 100, you win, trailing your stop loss up, you win 700. All right, so that's trade number 1. Remember, we just followed these 5 steps here. We look for a 5 minute fair value gap. We drew our Fibonacci. We look for that entry at 0.618 because it lined up inside that bullish fair value gap. We checked for divergences, which we didn't see, especially on that first trade, meaning we could probably go with our long theory. We didn't have a strong bearish divergence or anything like that, signaling, oh, this could stop us out. Our stop loss below the 5-minute fair value gap candle. We showed that take profit 1.272, 1.618, 2 or 2.272. And this one went all the way to our 2 level had we trailed our stop loss and not just gotten out at the first take profit level. All right, so our next trade here was, what was this? Oh, 9:30 a.m. New York's market open to 9:41 a.m. So we will go ahead, bar replay that. Believe it was a short, so you get to see a short and a long in this video. We're coming back to the 5-minute time frame. So currently, what are we looking at here? We are in clearly a downtrend, right? We got lower highs being made. Look at all these lower highs. You can draw a trend line, see we are in a clear downtrend, meaning we should probably go with the trend. The trend is our friend, and we have lower lows, lower lows. Lower highs, lower highs, lower highs, right? All in market structure theory here. So here we can probably assume we should probably go with the trend, which is the overall downtrend. And we are looking at all these lovely bearish fair value gaps on the 5-minute. So instead of a bullish fair value gap, we're just looking for a 5-minute bearish fair value gap. Okay. Next, we can take step number 2. So I will actually drop to the minute here so it's a little bit clearer to see. And we were looking at the 9:30 area. Here is our 9:30 a.m. trade we were looking at. And if we move to the 5-minute, you can actually see we may start forming a bearish fair value gap up here. We got one up here, so we're probably looking for shorts. So I'll drop to the minute again. We'll go ahead and play this forward. And if you take your fib retracement tool, step number 2, you'll see even on the 1-minute, we got a bunch of bearish fair value gaps. I just prefer the 5-minute. Bearish fair value gaps, they tend to be a little bit more accurate and more consistent. But if we take our fib from the bottom to the top of this area, a good point that sticks out. This is not a point that sticks out on the trend. This is not a point that sticks out on the trend. We want a point that sticks out nicely. So here we can look at the 0.618 area again. We got this nice 1-minute. Could even look, since our 5-minute hasn't formed yet, I can see it starting to form maybe on this candlestick, but we could look at the 3-minute too. So we do have a 3-minute bearish fair value gap here with lining up with that 0.618. So then we can set our limit order for a short. We're just looking at the 1.272 to keep it simple, 0.618. Now, since our 5-minute bearish fair value gap hasn't quite formed yet, we can certainly look at the 3-minute one and place our stop loss just above that bearish fair value gap candle, which would be this guy right here. So including the wick, we're going to give it some breathing room since our 0.382 line's right next to it. So something like that. Okay. So here's our stop loss at 148.55. Entry at 147.88. You'll see we have a risk reward ratio of 2, meaning if we risk $100, we can gain $200, which would make us a profitable trader. Okay. So usually you're looking for those 2 risk-reward ratios. Like I said, it won't always exactly be 2. We have a 2.17 here. Last trade, we had around a 1.7 or 1.8. It's not going to be perfect to a T. It's trading, but we're usually looking for those 2s, okay? At least 2. And if we can get more, even better, okay? So we will go ahead, play this forward. So you'll see, came up, wicked through our 0.618 quickly, dropped to our 1.272, so we are clearly in profit. We're going to go ahead and check our 5-minute now, and you'll see it did actually end up forming a bearish fair value gap here. We actually had a candle close, formed this bearish fair value gap. We had a second candle come up and hit that 0.618 area again. So it came up twice into this 0.618 area. Here's our 5-minute fair value gap candle. Stop loss just above that 0.382 line since it's so close to this fair value gap candle wick. And then if we wanted to see how we could trail this down, we could certainly do that. I'm not sure if this one made it that far or not, but let's see how it goes. I just took profit at that 1.272, so it was a nice little $400 trade, and we can just trail this down, right? So here's our next 5-minute fair value gap. So right now, if you moved your stop loss, you would be at about break even, okay? If you lost, maybe you'd lose like 20 bucks or something. I don't know. But you'd be around break even, right? Here's your next 5-minute fair value gap. Here's the wick on that fair value gap candle lining up with that 0.618. We'll see what happens when we trail it down. I don't believe this one went that far down. Yeah, so you would have, had you trailed your stop loss on this one, you would have gotten out at break even, just about, okay? I took profit at the 1.272, so that's why I sometimes just take profit there. It's going to vary on each trade you take, but I just want to show you all the possibilities depending on your own trading style. Everyone has a different trading style, but you can certainly trail stop losses. You would have got out at break even for this one. However, the next trade, you would have made $700 risking $100, so you would have made up for this trade. Comes out okay in the end. But that would be trade number 2 there, and that would be a short, okay? Now the other thing, step number 3, checking for divergences. So I wanted to show you the fair value gap in Fibonacci first. You'll see on the 5-minute, guess what? No divergences here. We already hit this bullish divergence on the 5-minute, okay? It's tinier. I wouldn't even worry about this one. It's probably just a pullback, okay? So we just had a little pullback in our short trend. Same with this one. Just another pullback in our trend, okay? So sometimes the 5-minute divergences don't do justice, okay? Can just signal a pullback in the trend. However, we really don't have any bullish divergences here, so it was even a better entry, okay? So if we look at the 15-minute though, now we are seeing our bullish divergences come into play, okay? So we have a lot of bullish divergences coming out, and this is something where you have to be careful. So if you saw all these coming into play, and you saw the candles struggling, as you do here, they're struggling on the 15-minute to work their way down more. They're not as straight and clean as a trend as they were here. But now we have a bullish divergence, which is why you should probably think about getting out at the 1.272, especially since if you move over to the left here, we have a nice bullish fair value gap lining up. Usually I'm taking profits with off to the left. If we're going for shorts, it'd be a bullish fair value gap. If you're going for longs, it'd be a bearish fair value gap at the top. But usually those line up with your take profit levels at 1.272 or 1.618, okay? But now we're getting some bullish divergences. These are pretty big. I would definitely not be looking for shorts in this case. This would not be an A+ setup. We'd have already been out of this trade anyway had we taken profits at the 1.272 and not trailed their stop loss. You'll see with all these bullish divergences we have going on in the 15, that's probably a good indication of why it popped up like that. So these are the divergences you're actually looking out for. The 5-minute, we didn't really have too many, so we were good to go. I'm not really worried about a couple little ones or 5-minute pullbacks, okay? It also depends how strong the trend is. These are the exact 5 steps we're looking for. Feel free to write these down. 5-minute fair value gap, draw your Fibonacci, look for a fib line like the entry at the 0.618 as long as it lines up with the fair value gap. Check for any divergences on higher time frames. This is going to make a big difference. If you're looking for long setups and you see a change of character and some higher lows being made, maybe a trend reversal, and you got that bullish divergence going, probably look for longs, right? However, if you're looking for longs and you're getting a big bearish divergence on the 15-minute, it could be likely to stop you out. So probably don't think about entering a trade there. Just save yourself the risk and save yourself that loss and look for the next A+ setup. You can wait a day. You can wait for the next hour, whatever it may be. There will be more trades, I promise you. That doesn't have to be your trade of the day. So stop loss below the 5-minute fair value gap candle, including the wick. If it matches close to a fib line, give it some breathing room just above that fib line. Take profit. We're looking at the 1.272, 1.618, 2.272. We also went over trailing stop losses, how they can and cannot work with those divergences. So if you guys do have questions on this trading strategy, it's by far one of my favorites, please feel free, drop your comments down below and I will be sure to get back to you. I live trade pretty much every day in my group on this. It is summertime, so sometimes I do have things going on with the kids. But other than that, I'm trading morning and night with my group around 8:30 a.m. and p.m. to 10 a.m. and p.m. So if you guys want to see it in action, feel free to join down below. I also do have a technical analysis course going over all the skills I feel are most important, what really helped me in my trading game. Technical analysis mastery, candlestick charts, liquidity sweeps, trend lines, Fibonacci, fair value gaps, MACD, RSI, change of character, breaks of structure, order blocks, Elliott wave theory, price action. These are all very important when you're trying to read the charts and first learn it out. We go over trading psychology, setting up your account with or without a VPN, depending on what you need. how leverage trading actually works. Here's the trading strategies, right? There's 4 trading strategies we rarely cover. And then if you're trading meme coins as well, here's some trading strategies on that. But that is the entire course. Here's the live trading. I record all the live trading sessions. So you'll see we have a bunch of live trading sessions recorded here, constantly recording. So if you do miss a live trading session, it is uploaded daily there. So feel free to hop in and you can take trades along with us, or you can see how all this TA comes into action and kind of my crazy thoughts when I'm trading emotionally and stuff like that. You got to be really good at discipline. You got to be really good at following your rules. And that is everything I try to teach to everyone. A lot of people try to make trading look super easy. However, it does take some mastery to learn the skills. It's not something you're going to learn overnight. I wish that was the case. And I'm just being honest with you guys. It took me years to learn this stuff. Okay. But do I love it? Do I enjoy it? Do I think it's totally worth it? 100%. Where else can you just increase your income, increase your economic level status just by looking at a chart? You don't have to really talk to anyone. You can literally look at a chart and make money. All you're doing is increasing your risk as you move up levels. So you can start with $10 leverage trading and eventually move that up to $100 risk. So you're having those $400, $500, $1,000 days. It just moves up. You're just moving zeros and decimals. That's all it really is. Okay, but it does take some practice, some mastery to learn these concepts, get used to it, ask questions, whatever you need to do to become successful at this. I am here for you. But anyways, like I said, drop your questions below. I will be sure to answer them, and I'll see you on the next one. Thanks.